Today, we're going to discuss the million-dollar question. Has Bitcoin already bottomed out, according to some of the popular TA experts on YouTube? Or will this worldwide economic downtrend and the impending bad news that we're about to get drag Bitcoin down into the abyss? Let's break it down and discuss. What's up, gang? It is I, Carlton Flowers, your crypto pro.
Yay!
And today we've got a special news report for you. We're going to talk about the current events that are going on in the world, and we are going to compare the evidence that is telling us that the markets might take a big dump. And we'll compare this against some popular opinions by YouTubers, especially one in particular that I will feature during this episode, where this individual claims that Bitcoin has already reached the bottom point and that it's only sidebanding or up from here. So we're going to consider his argument, and then we're going to consider the news. And then we're going to look at the charts to see what evidence that we can find where we can make our own decision and determination. But before we start, let me remind you that none of this is financial advice. I'm only giving my opinion, and as always, I warn you to not play with this market, spending money that you cannot afford to lose. All right, before I jump into the news, I would like to point something out right here on the chart that is just glaring at me right now. And you know what it is. We got a red candle with a wick that has touched down on the red dashed line. All right, so what's going to happen here? Are we going to see a failure? Are we going to punch through the red dashed line and dive down into lower territory, or are we going to experience a bounce at this point? I don't know. There's a lot of people that are saying that we're going to have a bounce, possibly a bear market rally, and some that even think that this is the all-time low. But we'll get into that later when we get to the TA portion. But first, we're going to jump into some news pieces that I pulled out on the web, and I will provide links to all of these articles so you can read them in full. But I just want to cover some of this information briefly. So, first and foremost, former Fed trader predicts ugly times as the central bank shrinks its balance sheet. All right, this comes from Joseph Wang. Let me read this paragraph to you. When the economy wasn't doing well, QE, or quantitative easing, put downward pressure on interest rates and increased liquidity in the financial system. That means available money to spend. Now the Fed wants to tighten financial conditions. QT, or quantitative tightening, increases the amount of treasuries, or bonds. The government issues bonds that they sell, where investors can buy them, and that sucks money out of the system. Increases the amount of treasuries available to investors while also reducing their cash holdings. Mechanically, the U.S. Treasury issues new debt to an investor and uses the issuance proceeds to repay the treasuries held by the Fed. The Fed receives that cash and simply cancels it. The opposite of what happened during QE when the Fed created cash out of thin air. That's when the money printer goes brrr and they hand out free money for everyone. All right. Next, this is happening at a time when the Treasury issuance is high. Why does that matter? Market pricing is determined by supply and demand. And in the coming years, there's going to be a tremendous supply of treasuries coming from two sources. One, there are the budget deficits the U.S. government is running. While the deficit will shrink a little this year compared to last, the Congressional Budget Office says that the trajectory is basically $1 trillion a year of Treasury issuance, selling bonds, for the foreseeable future. That's a lot. That's significant. The second source of additional supply is quantitative tightening. Together, these will increase the supply of treasuries to historically high levels of around $1.5 trillion this year and next. Okay, now consider this. If we're going to be sucking out $1.5 trillion from the economy over the next 2 years, do you think this will have an adverse effect on markets? And do you think this could lengthen the time that we're in a bear market in crypto? That's up to you to decide. Before COVID, the net supply was about 500 billion. That's 1/3. All right. So it ends up saying that there is some fragility in the markets right now, in the treasury market, and it will likely be stressed as quantitative tightening ramps up. All right, moving right along. This comes out of CNBC. This is from earlier this year in May. Investors withdraw over $7 billion from Tether, raising fresh fears about the stablecoin's backing. Now, why do I bring this up? I bring this up to remind you that Tether and the liquidity of this stablecoin is the key to a bull run. Without it, we can't reach those new higher highs and get into the discovery area of the chart where no man has gone before. And all of this Tether FUD is still looming. Here in Bloomberg, this is earlier in the year. I think it was in February, or it might have been December of last year. Tether fails to dispel mystery on stablecoin's crucial reserves. Holdings include $30.6 billion in commercial paper and CDs, which is not cash, and about $1 billion moved from reverse repo notes to money funds. I bring this up for a reason. If Tether says we're backed 1-to-1 to the US dollar with cash, and then they come out and say, well, actually some of it's commercial paper or investments and certificates of deposit, what happens if that commercial paper loses value? Keep that in mind. Here's another one from October of last year. Anyone seen Tether's billions? A wild search for the US dollars supposedly backing the stablecoin at the center of the global cryptocurrency trade and in the crosshairs of US regulators and prosecutors. That's interesting. So this is dating back almost an entire year. Now, listen to this. Though markets still widely expect a 75-point basis rate hike, risks now are skewed to the upside, with investors completely wiping out the odds of a smaller 50-point basis rate hike following the inflation report on Tuesday. This just came out a couple days ago. Traders are instead now pricing in a 20% chance that the Fed will raise rates by a bigger than expected 100 basis points, according to the CME Group data. Now, it's probably going to be a 75-point rate hike, which is not going to be good for the markets. 50 is off the table, but we still could get a 100-point increase. And if that happens, you know the markets are going to tank. That's just something to keep in mind. But let's get back to Tether. Look at this article here. This is from, I think, a month or a couple of weeks ago that this happened. Evergrande lenders appoint receiver to seize Hong Kong headquarters. Crisis at debt-laden Chinese property developer deepens in wake of default last year and failure to sell building. Lenders to the struggling Chinese developer Evergrande Group have appointed a receiver to seize its Hong Kong headquarters. The headquarters, two sources have said, as the world's most indebted developer struggles to emerge from its debt crisis. All right, the reason why I bring this up is because Tether at one point was saying that they had commercial paper in the China real estate market, specifically in Evergrande. Now, if Evergrande goes down the tubes, we could have the possibility that part of this 1-to-1 backing in the commercial paper that Tether has could go out the window. This could mean that if we have a serious black swan event, Tether could lose its peg. Now, if Tether comes under U.S. government scrutiny, and if they do lose their peg, this is going to absolutely have a catastrophic effect on the markets. All right, now this is coming later. Let's come back to that. That's after we look at the charts. As a matter of fact, let's just jump into that right now. Let's talk about Crypto Crew University, and you can go to Mark's channel. I really enjoy Crypto Crew University, and I watch his videos all the time, and he tends to be pretty much on point. But this is what has me kind of just in a position where I can't decide on what I want to believe. He talks a lot about this rainbow chart. And I had mentioned this before, how the rainbow chart shows this absolute bottom, the blue part of the band, where Bitcoin has never gone below. And we're in that blue part of the band right now. And so according to Mark, we don't fall out of this ever. And the point that I was making before is that if we had a catastrophic drop, what would happen to this chart? It goes out the window. But does this chart consider a bigger picture? So when you take the history of Bitcoin, 10 years worth, 12 years worth, and you have this chart, what if you shrunk this down? Let's just draw another one here. Let's make a new chart. Let's say here is the 12 years right there. And then, of course, we've got the big dip that could happen, that instead of having a bottom right here, which is where we're looking at right here, we fall out of this, and then we have this new point down here that the Bitcoin price bottoms out at. Well, what if you had to come up with a new chart that fits this? What if there is a new chart that goes over, say, a 20-year period that fits everything, where this top band is up here, kind of comes along like this and continues on? And then what if that bottom part goes out the window because we have a new blue band that includes this possible drop where we could fall out of the rainbow chart where we're sitting right here? That's something to consider. And so that's why I don't put all of my faith in this rainbow chart, and I consider the possibility that it could be invalidated. But for right now, the point that he makes that we have never fallen out of here, it is valid up until now, considering the history of Bitcoin. But history does not always prove right when we don't know what the next 10 years is going to hold. Another thing that Mark talks about is the golden zones. And so he shows in his videos, after we have a death cross in Bitcoin and we hit a bottom point, we're going to look at another chart that discusses his theory of the death cross and the absolute bottom. He states that we only have these golden zones once in a great while. And there's only been 5 in the history of Bitcoin. And we're in the golden zone right now. And the way he sees it is that we could have a double bottom, or we end up bottoming out right here. Hang on a second. Let's make that line a little bit thinner. That we could bottom down here, and that we will not fall out of this golden zone. And after we hit this double bottom, then we rocket ship out for the next phase of the bull market. Do we put all of our trust and our faith into that? Well, thus far, it's proven correct, because here's 1, 2, 3, and there's one underneath my video window here. Actually, it's not there. Well, there's 5 total, and here's 3 of the last golden zones. And so what he's saying here is that we're not going to fall out of this, okay? That we're going to ramp up right here. But if we find that the rainbow chart fails us because it is wrong, because it's not considering what could possibly happen in the next 10 years, what if we fall out? And what if the golden zone is actually further down? Let's say the golden zone ends up being down here in the 10,000 area. It's possible that that could happen. Maybe not as likely as the bottom staying within this golden zone here, but we just don't know at this point, because we don't have an idea of where the price goes in the next 10 years. Now, when we consider the news events that we just discussed, and when we consider the possibility of that 100-point rate hike, which holds more weight? Which carries the weight? These golden zones and the rainbow chart, or the worsening economic conditions and the factors that we are seeing reported on every day in the news. Do you think that with quantitative tightening and sucking $1.5 trillion out of the economy, do you think it's possible that we fall out of this golden zone right here? Would that be enough to pull it out, or will the chart reign supreme? Now, on the one hand, I'm big on the charts. I believe in technical analysis, but on the other hand, I know that sometimes charts get invalidated and we get bumps that happen. We get reversals on trends that don't abide by the TA. And that's where we have to go in and look at the charts. Like right now, several people are saying that we're going to bounce off of the red dash line and we're going to move up. But we see that the blue line and the red line on the stochastic have touched. Now, we do have bottoming here where the histogram shows that we're approaching the zero line. And we do have an impending possible cross happening here with the slower MACD oscillators. But if this crossover plays out and we go down, will we hold the red dash line? I don't know. There's no guarantee that we can hold that. Now, the biggest thing that we have is this volume node here on the VPVR, which is volume node in the visible range, which tells you how much buying and selling of Bitcoin goes on at a particular price instead of at a particular time, like we see with the histogram on the volume chart. All right. So the price line tends to gravitate towards these nodes. There are two nodes down below, and there's a bigger node here at the point of control price. It might have more gravitational attraction power, but if we get away from that big node at the POC, and if we break the red dash line, then there's a chance that we could see price jumping down to these two lower volume nodes. One is at 1912, one is at 18,859. Now, if that happens, the momentum could drag us down to the volume nodes that fall below this visible area on the chart. For that, we need to go to the one-day chart. So let's switch to the one-day here and see what we look like. Well, this is not looking so great. Now, it does look like that the blue line, the fast line on the stochastic, is trying to curl around and maybe cross over the red line. But we are sitting below the point of control price and sitting on the red dash line. And we also have what looks to be a crossover happening on the MACD, where the fast line is about to cross over the slow line. And we also see that the histogram went from printing dark green bars to light green. And now we are right at the zero line. So if this cycle continues and this crossover happens, I imagine we're going to fail the red dash line. Now, let's clear this and scrunch down the chart so we can get a visual of the volume nodes that occur below this line. And we can't even see them on the one-day chart. We're going to have to go to the 1 week chart to get an idea of where those lower nodes are. All right, scrunching down the chart. We can see, let's just stretch it out here so we can play this conservatively. All right. And we see that we have our point of control node from the previous charts at 20,000. But then if we fail the red dash line, the possibilities are this node at 15,800, this node at 13,000. Then you got the one at 11,900. And of course, jumping down to roughly 10,000. I don't think this one below here, if we move a little bit further out on the visible range, we can see that 11,000 to 10,000 could be the worst case scenario. Now, looking at the MACD, this chart, portion of the chart, was telling us that we were in the green on the histogram, but notice how we just printed a light green bar here, which says that momentum is going downward. And now the fast line is starting to curl over a little bit. Will that fast line cross over? If it does, we're going to see this downward trending sloping line that I put here. It's going to play out and act as a peak. Now we went above it a little bit here, and we're above it right now. But look at the weakness of the histogram. The histogram is not going much above the zero line like we did on these previous two runs, which tells me that the overall momentum is still trending downward. We broke out of this bear flag here, and I don't know what in the world this formation is that we're looking at right now. The only thing I can say is a broadening, what do you call it? A broadening channel, a widening channel. And what happens there is when you connect your highs and your lows, it looks like a megaphone. Some people do call that a megaphone. And in a bear market, that usually means that you're going to break out of this and have another drop. Will it happen? I don't know. It's too early to tell, but I still remain cautiously bearish. Now, I'd like to know what you think. Will the charts save Bitcoin, or will the news reign supreme and drag Bitcoin down? As we can see with this weird chart formation here, after we broke out of the bear flag, we didn't kind of sideband like we normally had in the past. But what you can see is when this red candle formed here, that was a result of the CPI coming out and telling us that consumer price index was showing 8.3% inflation instead of 8.1. And the markets were shook. All right. Now, if we just jump really quickly to the DXY, we can see that we're still in a very bullish romp as we had very briefly eclipsed the 110 level for the first time in a long time, in many, many years. And we're still on a very aggressive uptrend with the dollar. The US dollar, with the quantitative tightening that is going on, could continue this romp. And while this continues to go up, it's going to work against Bitcoin. Now, we do have this crossover here. It says that we might have a pullback, but thus far, we're doing nothing but staying up here in the overbought zone with the DXY. So getting back to the question, will the news drag down the price of Bitcoin? The economy getting worse and worse with a worldwide recession looming on the horizon? Or do you think the charts reign supreme? Do you think that we will not feel the current golden zone that Mark of Crypto Crew University lays out? Go and watch his videos and then let me know in the comments below. I'd love to hear what you think. So that is all I've got for now, but I would love it if you would like, comment, and subscribe to the Crypto Pro channel. And I also appreciate the fantastic support that I have been receiving. Let's give a couple shout outs to some recent donations. One is coming from Marvin Witt on the 14th, who donated $2. Thank you, Marvin. And we also have my man Carl with another super thanks of $10 on the 13th of September. I thank you guys so much because my costs of producing the channel are going up. They're increasing. Every month I get notices that they're increasing the rates for what the subscriptions that I have that I use for graphics, for music, for information. All of these rates are going up. So I really appreciate your help in donating to the channel. I do need to get out some more premium previews. Please look for those in the coming days. I'll have a few for you this weekend where I'll have no editing, just straight commentary on what's going on with the news and with the technicals on the chart. And then hopefully beginning in October, we'll start the membership group where you can subscribe for that premium content. That's all I've got for now. This is Carlton and I am out.